Welcome on board Ajay Bagga and discuss the fundamentals that the market is currently dealing with. And Ajay, you can't help afternoon firstly but talk about Avenue Supermarts. You know, irrespective of the 8% cut that the stock is seeing, it's still trading at 100 times forward PE. Do you sense that in the days to come, we're likely to see some more derating, some more cool off in the stock, or do you think this dip is going to be bought?
Aisha, a particular stock I won't be able to talk about, but you know, it comes back to the classic theory of, you know, at what valuation are you willing to pay a price for growth? And I think we have the Walmart example where, you know, 10 years the stock really did not give any appreciation to investors when it hit 100 times price earning about a decade back. So I think we have to be cautious on that. If there is very high growth, you can justify price earning ratios, but 100 or 75 kind of price earnings, you would really need a very strong growth stock. And then as size, you know, as the size grows, it becomes difficult to deliver that kind of growth. So won't be able to comment on the particular stock, but valuations you need to look at because it's a very critical determinant of the appreciation and the returns a shareholder will get. It's a very critical determinant, the kind of valuations at which you enter a particular stock.
Fair point. Ajay, I wanted to get in your attention, or your take rather, on Reliance Industries, which is also another result candidate. The sense on the street is that the positive developments in the telecom segment as well as retail is going to drive strong growth for the company. Brokerages across the board are still very bullish on the stock. You know, trading around 13.8, 14 times the FY20 EPS. What is your assessment of Reliance Industries? What are going to be the key factors that you'd watch for on earnings day?
Well, Avan, again, I won't be able to comment on a particular stock, but when you're looking at, you know, a conglomerate like Reliance, you have to see the petchem business, you have to see the refining business, and then retail and geo. All four are pretty substantial businesses now. Of course, the legacy business is the largest. There we have seen a couple of issues which normally, you know, in the private sector you don't see. One is the inventory losses that normally the oil marketing companies face when there is a very sharp fall in the crude oil prices, as happened in the last trailing quarter. Second is the gross refining margins coming down, you know, as reported in the Far East. So there again we have seen Reliance to some extent being counter-cyclical. Third, there have been some shutdowns, so we'll have to look at the volumes as well. I think those are the worry points, but the huge growth on both the retail and the telecom franchise, and there are multiple triggers in the telecom franchise, you know, which are also trending towards fintech, which are trending towards e-commerce. I think that backbone has been laid with 200 million subscribers. So it'll be very interesting. I won't be able to give a buy or sell, but overall it's a growth stock. It is really the largest company in India. So fund managers remain very interested in it.
Closely watched. 1093 is where the stock is currently at. 17th of January, that's when the numbers will be declared. What's the outlook on, Ajay, the metal space as a whole? You know, a lot of analysts, a lot of experts seem to be advising that for the next year or so, steer clear. There's falling prices in the domestic market. We're seeing the rising steel production in China, the overall currency impact as well. Do you think that there are still going to be quite a few headwinds for the sector as a whole?
Yeah, more headwinds than tailwinds, issue being China. So as the largest consumer it really determines the global metal prices, and the news out of China is not very good. In fact, today the Asia sell-off or the weak European opening is largely on the China trade numbers disappointing, exports being nearly 4% plus down year on year, and imports which are linked to exports being about 7% plus down. So that is really spooking markets today. The second big thing is in China, with the incremental stimulus is not really having the productivity gain of erstwhile years. So because it's already a very highly leveraged economy with a very big debt overhang and a huge stimulus already built in, that incremental stimulus is not having the intended impact. So what we are expecting is that there will be a even bigger policy stimulus by the Chinese central bank and on the fiscal side by the Chinese government to try and prime up its economy. But right now, metals being linked to China is a very much a no-go zone. Is it a value pick? I don't think, because we don't know how long this phase will last. If there is a US trade agreement, that could be a very fast trigger. So, if you like fundamentally sound companies in India, a little bit can be bought, and hopefully wait and see if in the next 90 days a US trade agreement comes through. That will again become a very big trigger. But overall demand is going down, and that's not very good news for metals. Normally they underperform at this part of the cycle.
Infosys is up to and still sticking by with its gains, the top second mover on the Nifty, along with, of course, Yes Bank, which is really the top mover. There's Tata Motors, there's Infratel and Sun Pharma, they're all holding out. But Infi as well has managed to cling on to solid gains of about 2.5%. Ajay, now with the two big boys, TCS, Infi both out, does the pecking order change? Because Infi stock price is now supported by that buyback. The numbers at least have been a little better than what TCS has reported, or maybe, people were going in with higher expectations for TCS perhaps.
Yeah, overall what the major things we have to look at, even though margins have compressed a little, the business model changes seem to be taking effect. TCS, for example, had a more than 50% year-on-year growth in digital revenues. So that was very welcome news for the street, despite all the other issues that came up. And secondly, the market had valued a lot of the rupee, depreciation impact. A lot of the other things were already embedded in the stock. So we saw a pretty poor reaction on TCS. Infi was welcomed, and the support is the 800 rupee buyback that has been announced, 8,000 crores plus of buyback. That's supporting the stock. Overall, IT, large cap IT, we remain positive on. I think rupee has been an underperformer again in the last 2 to 3 weeks. We expect that trend to continue, and our IT companies will benefit. That's a more smaller benefit. Larger benefit is that they have been able to scale up. Finally, they are getting traction in their digital part of their business. The entire IoT, VR, AR, artificial intelligence, machine learning parts. Those are finally starting to kick in, getting a share of about 30% of revenues. We have seen that play out with the other multinational IT companies, and our companies are finally catching up. So this will be an interesting part for the next couple of years at least. We expect good returns to continue from IT, and large cap IT will garner a greater share. Mid cap IT valuations are already high, and there could be some headwinds. I would stick with the quality names and at the top end of the IT pecking order.
Okay, fair point.
Ajay, can you just give us some sort of assessment as to how you've read into all of the developments that have been trickling in? Aisha spoke about how we have seen quite a smart movement. Technical chartists are saying that we might see the downside to Yes Bank as well to a great extent capped. Now more details emerging with respect to who could potentially replace Rana Kapoor. How are you reading into all of these developments?
Well, we have seen that, with ICICI Bank and Axis also, as the leadership question got settled, we saw that there was a strong rally. So overall, it's good. Today Mr. Brahmdutt being approved as the non-executive chairman, that was welcomed by the market. And these are very fine professionals, both Rajat and Ravneet. Have very good corporate banking experience, and they have been very senior bankers. So either of them would be welcomed by the market, or if there is a third person, I'm sure the board would really have put in a lot of effort in getting the best talent. And what happens then is it takes off a discount that comes on firms like this because of a leadership question. So there was a question that will Mr. Kapoor continue as in a chairman capacity, and that also got sorted out today with Mr. Brahmdutt's appointment being approved. So the market would welcome some kind of a strong, durable, robust leadership coming in, and that's what we are seeing. Again, I'm not giving a buy or sell on a particular stock, just analyzing the leadership question, and we have seen that with the two other private lenders. When the leadership issue got resolved, we saw a good positive reaction from the market.
Okay, that's the Big ET Now exclusive, and Yes Bank is sure reacting in trade today. Incidentally, the stock is up a good 7% from the low point of the trading day, which it started off at. Open interest up nearly 6% with fresh long seen, and that's the biggest intraday gain being witnessed since December 11th. That's the word coming in on Yes Bank.